Hello again, it's Ed here from Wise Up. Um, Hopefully you've had a quick look at our general taxation session that we've done. It's on the website. I thought I'd do a separate one completely for income tax because it is something that people do get a bit confused about. Very well worthwhile you knowing a little bit about it yourselves before you get sort of involved in that whole process. When you start work as well. Not as daunting as perhaps some people think it might be, but we'll sort of spend the next 15 or 20 minutes just going over the basics so that you've got a fairly good idea of what's in front of you. Right, we're going to start with income tax. Now, income tax is something that will be paid on your income, as it says. There is no age limit for when you will have to pay income tax. So don't assume because you're under 16 that you don't have to pay it. You actually pay income tax as soon as you earn enough money. So there is nothing to do with age about who has to and who doesn't have to pay. The amount of money that you can earn every year is something called your personal allowance. Now, everybody that earns anything under £150,000 gets a personal allowance. I've said on that slide that everyone gets it. It's not quite true. If you're earning more than 150 grand a year, you won't get a personal allowance. But my guess is that none of you will fall into that bracket straight away. So let's assume that you will be getting a personal allowance. And on that personal allowance, you do not have to pay any tax. Now, the next obvious question is, well, how much is my personal allowance? Well, generally, or certainly for this year, it is £12,500. Now, the way that you'd find out what your personal allowance is that you would look on your wage slip, or you may have had a letter from HMRC, and you will have something called a tax code. Your tax code will be 4 digits. If you look at the photograph in the bottom right hand corner, you'll see that tax code there is 1150L. Ignore the letter. The letter is there for your employer, not for you. But if you replace the letter with another 0, that will give you your personal allowance. So for this particular person whose letter I've shown in there, it would be £11,500. But for you this year, it should be £12,500. So all of your tax codes should be 1250 with a letter at the end. Please check that carefully on your wage slip. Most of us get our wage slips. We look at the amount going into our bank account and that's about as far as it goes. But please take a minute to have a look. If there is a mistake, and it's not unlikely that there's going to be a mistake, generally I think everyone gets a mistake every now and again on their wages, then it's your responsibility to point that out. Nobody's going to show that for you. So do have a look, take responsibility and make sure that your tax code for this year is 1250 with a letter. That tax code changes every single tax year. So from the 6th of April to the 5th of April, that's our tax year. So every tax year, it generally changes. That will be announced in the budget. And now the budget will be earlier in that particular year by the Chancellor. And he will tell you what the new tax code for the next year is. It's actually been 12,500 for the last couple of years, so it's been held the same. I don't remember a tax code going down very often. Normally it either stays the same or it goes up slightly. It has been moving up over the last 5 or 6 years, but the last couple, as I say, it's been held at £12,500. So you pay nothing at all on your personal allowance. So irrespective of how much income you have, as long as it's under 150,000, you won't be paying anything. So you pay no tax at all on your personal allowance. On the next chunk of £37,500 over your personal allowance, you will have to pay 20% of that income to HMRC, Her Majesty's Revenue and Customs, the taxmen. Then you will pay a higher rate of 40% on anything between £37,501 to £150,000 over your personal allowance. And then you will have to pay the top rate of tax, which is £45,000 on anything above £150,000. So it goes up in bands. Those are tax bands. 0 on a personal allowance, basic rate of 20% on the next 37,500. That's over your personal allowance. The higher rate on anything that's £37,500 above your personal allowance, up to a total of £150,000, you'll pay 40% on that slab, and then 45% on anything above £150,000. So let's have a little look at an example, and I think it will become an awful lot clearer. Now let's say that you are lucky enough to find a job which pays you £62,000 gross. So gross is before any stoppages at all. You have a tax code of 1250L, which means that your personal allowance, if we get rid of the L, put another 0 in, is £12,500. You pay no tax at all on that. On the next portion of £37,500, you pay 20%. 20% of £37,500 is £7,500. And on the remaining balance, which is £12,000, which we start with our earnings of 62, take off our personal allowance, take off the next slab of £37,500, takes us down to 12,000. We pay 40% of that 12,000. So that's 4,800. So our gross salary was 62,000. Our tax bill for that year is 12,300. So our net salary would be 59,700, which is 62,000 less 12,300. Of course, there may be one or two other stoppages coming out of that money as well, and we'll talk about those in separate sessions, but generally that would be student finance repayments and national insurance contributions as well. You may also be paying into a company pension scheme. All of that would be coming out of your gross salary, and the bit that hits your bank account will be your net salary. Let's just have a look at that example again, this time graphically, which might make it a little bit clearer for those that are still a little bit confused. So there's our graph. Now our gross pay in the first column, our tax paid in the second column, and our net pay in the third column. And we think about it in 3 different slabs. So the first slab is our personal allowance. As we know, we don't pay any tax on that, so we actually get to keep all of that as net pay. So we get to keep the first £12,500. On the next slab of 37,500, we pay tax of 7,500, which represents 20% of that particular slab, and we get to keep the rest, which will be 37,500 less 7,500, which is 30,000. And on the final slab of 12,000, we have to pay 40%, which is 4,800, meaning we get to keep the last 7,200. So our gross pay was 62 grand. We paid 12,003 in tax, and we got to keep £49,700. So how do we actually make that payment? Well, if we just sort of kept all of the salary up to £12,500 and then we just pay 20% on everything after that until we hit the end of the next band, it means that our monthly income would be varied. It would be very good at the beginning of the tax year and pretty rubbish at the end, which makes it very hard to budget. So the way it actually works is that we use something called PAYE if we work for an employer, pay as you earn. Now what they would do is that they would actually make a calculation to find out how much tax you are due to pay. They would divide that through by 12, and then you would have that deducted from your salary each month, which means you get an even amount of pay every single month. Now if you're working for yourself, then you would pay your tax as a lump sum. You would have to fill out a tax return. You would fill that out as a lump sum in the following tax year, and you would have all year to pay that. So you in effect pay 1 year in arrears. You have to make sure that calculation is accurate. However, that's why we do the tax return, because if we are making mistakes on that, then there will be a small fine. If that particular problem goes on and we don't pay our tax on time, then that fine will get bigger and bigger. And in the end, if we are not paying any tax at all when we should be, then we could well be taken to court. So it's quite a serious offence. So PAYE, if we're working for an employer, if we're working for ourselves, then we will have to make sure that we keep enough money back to meet our tax obligation during the next tax year. So that's basically income tax. Now, the other part of this session was on national insurance. Now, national insurance will be deducted by your employer directly from your earnings. So it will be taken out of your gross earnings, along with income tax, along with student finance repayments, and the rest will be your net earnings transferred to your bank. Now, the national insurance will vary. So if you do not have a company scheme, which is now illegal, so every company that you work for has to offer you some sort of company pension scheme. If you decide to opt out of that, then your national insurance payments will be higher than if you decided to stay in your company pension scheme. By and large, I would always recommend that you keep a company or a personal pension scheme alongside your national insurance contributions. Now, your national insurance contributions go towards your state pension. Now, everybody who's 66 or over in the United Kingdom at the moment get a state pension, which is around £170 a week. Now, that age has actually just increased from 65, and by the time the vast majority of the people listening to this get there, the chances are that that age will have gone up again several times, maybe up as high as 72 or 73. That might sound on the face of it a bit unfair, but the reason it goes up, that age has to go up, is because people are living longer. So it's not just about when you start to draw your pension down, it's about how long you draw your pension down for from that point. Because obviously we have to make sure that there's enough money going into the national insurance scheme to be giving out. Now, you will have been given a national insurance number at age 16, so most of you will have that. Please keep that safe. You can get it sent out again, but it is a bit of a problem, and it is a number that you will tend to use an awful lot throughout your working life. Even if you're applying for a loan or a student loan, you will probably need your national insurance number as well. So keep it safe. It is a really, really important piece of information. Now, you can earn up to just over £8,500 a year without paying national insurance. But over that, you will pay 12% of earnings between £8,600 and £50,000. Now, if you are working and also part of a company pension scheme, then you will only be paying 2%, not 12, 2%. So overall, if you're in that company pension scheme, your national insurance contributions will be much lower. So a much lower rate if you're a member of that company scheme. Now, your company scheme, and I want to sort of end on this bit. So national insurance pays for your state scheme, 66 as it currently stands, moving up to 70, 72, 73, who knows. Your company pension scheme is separate. And very often your company pension scheme will kick in much earlier than your state pension scheme. You can also have a personal pension scheme as well, which means that your pension schemes that you might have all around different places that you've worked, you can bring all of those into one portfolio, one personal pension scheme, which will be run by a pension fund manager. So you will not be putting that money in yourself, and you will not be allowed to draw that out until you reach pensionable age. And by that, I don't mean 66 and above, I mean pensionable age for your company scheme or your private scheme, currently 55. But if you're really keen on working a short working life so that you're able to retire early at 55, let me just warn you, you have to plan for that very early. You will need something around £1 million in your pension pot to be able to retire at 55 with a family, which is a huge amount of money if we don't start planning for that early on. Good news is every penny that you put into your pension scheme, that is tax-free. The government will not charge you any tax on money that you put into a pension scheme. You will, however, be charged income tax in the same way as everybody else when you take the money back out of your pension scheme as a pension at some point in the future. I hope that's sort of enlightened you a bit on income tax and national insurance. If you found this through YouTube, go and have a look at our website, which is wiseupfinancialeducation.co.uk. Remember, it's Wise Up with a Z. Follow us around on Twitter, which is @wiseupme. You can take a photograph of that little black and white squiggle in the bottom left-hand corner, and that will take you directly to the website as well. Where there's lots of other stuff in there. There's quizzes and games and lots of resources, lots more of these video presentations as well. Hope you found it useful. Hope you've enjoyed it, and I look forward to talking to you again next time. Bye for now.